everyone, it's Tom here, the bearded accountant. Welcome to the very first episode of our podcast, basically. So we're going to start off today getting straight into something incredibly exciting for a podcast. I hope you're ready for this. It's the budget, everybody. Budget 2025. So we're going to go through some of it in detail and some of it we're not going to bother because, quite frankly, we're not financial advisors, we're not estate agents. A lot of it isn't going to be relevant to us, but if I had two words to describe how I feel about the budget, it would be shambolic and embarrassing. Now, in the lead up to the budget actually happening, you'll recall Rachel Reeves stood up in Downing Street early in November and did that big scaremongering speech, basically building everyone up ready to basically get hammered in the budget. So for an entire month, not only have I had people prior to that being concerned about how they're going to make ends meet, how they're going to continue running their business, how they're going to continue paying their staff, but even greater and heightened fear, really, in the general public of what the budget was going to introduce, which I don't agree with. And then add to that, we are looking at elected officials in government, in the Houses of Parliament, behaving, quite frankly, like children. Now, I would never want my kids to watch that, because if that is what is considered the epitome of democracy in the modern world, well, it's embarrassing really for all of us, and it is a shambles. You know, the OBR leak beforehand, absolute shambles that's happened, but we've all had emails that have unfortunately gone out too early. I've done it myself, accidentally hit send before an attachment, or suddenly gone, oh crikey, I wish I hadn't sent that email. I'm CCing in the wrong person. You know, it's happened in the past. Thankfully, I've learned from it, and I now have email send delays, and I double check everything and triple check everything. But these things happen. But on top of that, as accountants, we wait for the budget, and I'll talk through what this all is in a minute. But then we wait for the UTLAR. Now, the UTLAR is the Overview of Tax Legislation and Rates. Now, that is supposed to come out at the same time as the budget documents as soon as Rachel Reeves sits down. But the UTLAR took another 4 or 5 days to come out. So that's why this video is partly late. But it also cements for me that I think that a lot of the decisions about the budget were made at the last minute. And that is why the UTLAR wasn't ready. And I think that's the key point to remember, is that I think they weren't ready. They made decisions at the last minute that impacted the budget. But anyway, let's get straight into it. As you can see, thank you very much to Vantage Fee Protect. They've kindly given all of us, I'm a client of Vantage. My clients, through me, have Vantage Fee Protection. So in the event HMRC conduct an inquiry, the accountancy fees in dealing with that inquiry are covered by Vantage Fee Protect. They've given me a really good summary, which I'm sharing with clients, and I'll talk through a lot of the key points here. The big announcements that were made. It was a really good document to read through, so thank you for that. But first off, what we're going to do is talk about what is the budget. And we're going to break this down as easy as we can. So the budget is the UK government's annual financial tax plan. All right, it sets out how much the government intends to spend, how they're going to spend it, how it's going to be funded, and what changes will be made to the tax system. Oh, excuse me, it's been a long day. It's essentially the government's financial roadmap showing how it intends to manage the country's money and economic priorities. It happens every single year. It's now called the Autumn Statement. Used to be properly called the budget. It was then called the Autumn Statement. Everyone flies around with different names. I've always known it as the budget. Essentially, we need it because the government has to review its fiscal policy regularly. So they are doing it all of the time, but they need to set a point in the year where they say, right, we're going to build up to that date and time, and that's when we're going to make a lot of the big changes. And the reason why the OBR information being released in advance of the budget was so bad is that the markets react to the OBR information being released. It's supposed to be that as soon as Rachel Reeves stands up to talk, that is when the OBR information is held back, and then it's released as soon as she finishes her speech. The markets were able to move before she'd finished doing her speech, before she'd even started it, and that is quite an important thing to be careful of. I'm only 5 minutes in and I'm struggling doing all this talking on my own. So apologies if you hear me coughing. It is winter. But anyway, that's why we need the budget. Now, Rachel Reeves, she is the Chancellor of the Exchequer, so she delivers it. She sets out what the government is going to do. She's got loads of advisors. James Murray, who was sat, if you were looking at the telly, he was sat on her Her left, our right. Robin Milstead from Accountants Therapy met him. Great photo of how impressed she was with him. Fantastic, Robin. So I can't remember what his role is in the Treasury now, but he was overseeing MTD for a while. Great, thanks. Anyway, the OBR, why does it matter? So the OBR is the Office for Budget Responsibility. It's an independent watchdog. For those of you that are old enough will remember, George Osborne introduced it, and I think it was in how old was I? Be 2010, 2011, I think it was. Correct me if I'm wrong. It's supposed to be like a neutral referee, so basically fact checking what the government says they can do and what they're going to do. And we've gone over why it was such a scandal, but yeah, it's not good. People have obviously lost their job as a result of it. And then UTLA, so it's a good expression. You know, if you imagine Craig Ogilvie from HMRC with his sultry Scottish accent saying UTLA, and try not to sound Swedish like I do, then it's a fantastic little acronym. So it's the overview of tax legislation and rates. It's published by HMRC and the Treasury, and it contains the detailed explanations of every tax charge announced. So you imagine the budget is a big book, and the UTLA goes into the fine detail of all the changes that are announced in that big book. So what they look like, this is the budget. I will sit down after the budget is announced and I read through it. It's usually about 200 pages long, great fun. And then I read through the UTLA, and then I go through God knows how many news articles, press releases. I go on all of the governing body websites. I make sure I keep up to date with what's going on. And then the finance bill, you can obviously have a read about that, what that does. But effectively, the budget announces the changes. Then the UTLA comes out saying what the fine detail is, and then it goes through Parliament, and they have the finance bill, and it has its first reading. We're on reading number 2 on the 8th of December, so less than 2 weeks after the budget, we are on reading number 2. And they obviously tweak it and make changes, and then finally it will get royal assent, which is when pretty much everything becomes law. So great fun. Now we're going to go into the tax changes. So tax changes, the government is forever saying we are not put taxes up. We've all seen the videos of the government saying they're not going to put taxes up. They are going to put taxes up, and they have put taxes up on working people. Even if they don't increase taxes on employment income, they are increasing the amount of tax you pay by means of what's called a fiscal drag. So what I mean by that is this year they've announced again income tax and national insurance thresholds are frozen. That's these columns here for, basic rate bands, high rate bands. So the first 12,500, 12,570 is your personal allowance. So you pay no tax on that. After that, the next 37,700 is in the basic rate band. And then the next 74,870 after that is in the higher rate band. And then over that, so over cumulative 125, 140 is in the additional rate. Now you can see here that we've got different rates for different sources of income. So non-savings and property, basic rate 20, higher rate 40, additional 45. Savings is the same. And then dividend income at the moment is basic 8.75, higher 33.75, and then additional 39.35. From 26-27, the basic and the higher rate for dividends goes up 2 points, so up 2% to 10.75 and 35.75. And then in 27 and 28, the property rate comes in. So at the moment it's at 20, 40, 45. It goes up to 22, 42 and 47. And on the tax return, this is going to be a completely separate line. At the moment, it's all included in non-savings. But on that year moving forward, it will be a separate line. So it'll be non-savings, property, savings, dividends. Savings is also going up. And of course, the dividend went up the year before that. Excuse me, I can tell I'm getting ill. So there'll be a Facebook post out in a few days saying I'm ill. So what that means is, with the freeze of income tax and national insurance, what that means is your basic rate band isn't moving, your higher rate isn't moving, and your additional rate isn't moving. Most importantly, your personal allowance isn't moving. So that means that with inflation, your income hopefully goes up through pay rises. That means more people are pushed into the higher band. More people pay higher rates of tax. So a little working example here is if your salary for last year was 47,000, congratulations. With inflation of 4%, your salary will go up 4% every single year. And on top of that, your outgoings with inflation will go up 4% every year. And what you can see here is salary goes up. Here's the increase. This is how much is taxed in the personal allowance. This is how much is taxed in the basic. And then this is how much is taxed on the higher. And you'll notice that when they go over that 50,270 mark, they start to pay a little bit of higher rate tax. So they start to pay the higher rate tax. So their taxes go up. And because their disposable income is then going down, this is where fiscal drag is found. So their personal allowance doesn't increase, their basic rate doesn't either. So more of their income is pushed up. And that's what fiscal drag is all about. It's about the disposable income going down because they're paying more tax through fiscal drag. Not great. So when they say they're not going to get increased taxes on working people, well, they do. They just do it through fiscal drag, which is just an old-fashioned term that we've had for years. It's a stealth tax, simple as that. So what else have we got? The changes to the pensions salary sacrifice. From April 29, they're going to put a new cap on the amount of pension contributions that can be made through salary sacrifice. So basically, the first 2,000 per year can still be sacrificed, and that will be good for tax efficiency. But then after that, it will now attract national insurance. So you imagine we've had for 10, 15, 20 years, everybody being told that the state pension is not enough to live on. So you need to do more to put money into your pension, make sure you're doing better for saving towards the future. They've done that and encouraged people to do it. And yet again, this feels like another income tax or an attack on working people. So a working tax. Because people are just trying to save for the future. That's all they're trying to do. So high earners, company directors, they're all going to be affected by this. It is not great, in my opinion. I'm not a fan. Excuse me. Next up, capital gains and business relief. So this is all tightening up again. Some well-used business and asset reliefs are being reined in. That includes halving the tax relief available when selling a business to an employee ownership trust. And there's been a few of those in Plymouth over the years. And other targeted restrictions on capital gains tax planning. So again, if you own property or you own anything that might have a capital gain in the future, make sure you start planning, talking that with your accountant. Talk it through. How are you going to be impacted? We've then got the new mansion style tax. So properties worth over 2 million will have that additional rate of tax to pay or council tax to pay on their properties. Next up, capital allowances. This was a big one for me. So before you panic, if you're a small business, you are unlikely to be massively affected by this because you still have that £1 million annual investment allowance in the first, when you buy something that first year, you claim the AIA, and that means you get 100% tax relief on plant and machinery up to £1 million a year. So for most small businesses, that is enough. But after that, you have a writing down allowance. That's going down from 18% to 14%. So it's slowing down the amount of tax relief you can get on your assets moving forward. Really interesting thing that came out in the budget here. More timely payment for self-assessment. So I'm going to read it to you. As announced at the budget, the government will require income tax self-assessment taxpayers with pay-as-you-earn income to pay more self-assessment liabilities in year via PAYE from April 29. The government will consult on how this change is delivered and on timelier tax payments for self-assessment taxpayers more widely, including those with self-assessment income only in early 2026. So, long and short of it, in spring of 2026, the government is going to launch a consultation effectively on where they're going to change the payment on account system for self-employed people. So at the moment, you're doing it in January and July. We all know as accountants that making tax digital is changing the face of taxation. They are likely going to introduce quarterly tax payments. The fact that they've said they're going to change the system indefinitely from April 2029 for PAYE and self-assessment people. So effectively, if you've got both, instead of having those big January and July payments, you're likely going to have it coded out in your PAYE tax code and notices. I will be surprised if by the end of 2026, when we get the budget that year, that it isn't announced that self-assessment is moving to quarterly payments. I'll be amazed if they don't announce that as part of that consultation. So yeah, we knew that was coming for years. They've always said that it's not been part of the plans. It now is, and it's in black and white. Making tax digital, soft landing. My notes here say groan. I'm not a fan of it. We, as accountants, have been told by HMRC to get our clients signed up. There will be penalties. We're going to have penalty point system. Do it, get signed up. And then when we've been beating clients with a stick imposed by HMRC, they're like, oh, actually, the first year, if you don't file on time, there won't be any financial penalties. So they've removed the stick. Now the carrot isn't big enough for a lot of clients, so it's going to be hard now. I understand why they've introduced it. They're trying to be fair, or try to be seen to be fair. I think there's something bigger afoot here. I think the revenue's not ready. I cannot see why they would offer the soft landing if it wasn't because they've got a problem their end. I just don't think they're ready. Anyway, e-invoicing. Now you would have seen this across Europe. It's been quite popular in Italy, I believe, and Poland, I think, is doing it. There's a really amazing accountancy journalist called Richard Sargent, who is an expert in this, I would say. He's quite excited about e-invoicing from what I've spoken to him, so I'm looking forward to hearing what he says. But effectively, the government plans to make electronic invoicing mandatory for all VAT invoices starting in 2029. Now, this is off the back of MTD. You know, do they introduce real-time reporting? So you raise an invoice, you send it to your client, it also gets sent to HMRC. I think that's probably the end result. So we'll be interested to see what happens there. So overall, the measures are increasing tax for the next 5 years. That big black hole that Rachel Reeves said there was, in the budget never materialised. They're doing a lot better with tax than they said they would do. Has she misled the public? I'll let you decide. But yeah, I hope someone actually with some power makes that decision, because people have lost their jobs. People have not been recruited because of the budget scaremongering. So yeah, I think she has cost people their jobs. So it would be interesting to see if anybody follows up on that. It's unlikely they will. Well, let's go into something in a bit more detail now. So something that's really troubling people is about business rates. Now, I think page 15. Again, have a read through all of this. There is too much to talk about in the budget to go into everything in detail. But here we go, business rates. As announced in the budget, we will have 2 new lower multipliers for eligible retail, hospitality and leisure properties with rateable values below 500,000. And this will be introduced from April 2026. Each of the new multipliers is 5 pence lower than the standard multiplier for a business property of the equivalent rateable value. The new multipliers will replace the 40% relief given to RHL businesses, so that's retail and health and leisure, in 25-26, and will be funded by a high value multiplier on properties that have a rateable value above 500,000. So again, RHL is retail, hospitality and leisure, not health. So really, business rates are reviewed every three years, I believe. We didn't have one during COVID for obvious reasons. The last one we had would have been 2023, 24. Anyway, effectively, it's been the first time since COVID that we're having a rates review, and it is going to mean that business properties, their value has gone up. The system has removed the relief that a lot of people have in that 40% relief. So do I think business rates are going to go up for a lot of people? Yes. Can I put an estimate on it? No is the answer. I'm not a business rates guy. Effectively, there are professionals out there that do that. But from what I've read, it's going to massively impact pubs. It's going to massively impact hotels. The premises that are large, they are going to be impacted. So when the new rates come out next year, it's going to be interesting to see how much people's rates values have gone up. So yeah, we'll have to wait and see on that. Without looking at each individual client specifically and calculating what their rateable value is and what the multiplier will do to them, I couldn't say if everybody is going to have an increase, but I'd be surprised if everyone didn't. So another one to look forward to. Thank you very much, Labour. So let's just go through here. Let's go through the document, make sure we've covered anything. So the headlines: national insurance and income tax thresholds are frozen for 3 years beyond 28. Dividend income will see a 2% point rise to ordinary and upper tax rates from April 26. We've got savings and property income tax rates increased by 2 percentage points from April 27. And then from April 27, the cash ISA savings limit will be capped at 12k a year for those under 65, but the 20k total limit doesn't change as far as I know. Council tax surcharge on properties worth more than 2 mil. We've got the agricultural property relief and business property relief allowances being transferred to spouses and civil partners will be affected. Here we go. This is a good one. This is going to destroy industry in the southwest. The new excise duty for electric cars at 3p a mile for electric and 1.5 for hybrid. Now, I often bang on about this, but as always, decision making and policy making in London has a huge impact for those of us that are not living in the city. When you live in the rural parts of this country, which a lot of us do, you need to travel. You don't have good infrastructure for public transport. If you want to do a 15-minute drive in the city, that might be a mile or two. Out here in the sticks, that's going to be quite a few miles to get to school, to go to the shops, that sort of thing. And to introduce this, I feel like, is a backward step. So it is going to be more expensive for people that are driving electric cars. I worked out that I've got a diesel Golf. I pay no more than 50 quid a year. I couldn't even tell you how much my road fund license is. For me to go electric, I'd be paying 300, 400 quid a year. And that's not because I'm a huge polluter. It's just because I have to commute from my rural house to go to visit clients, to go and do my food shop, take my kids to school, all of that sort of stuff. I've got to drive miles, and this is going to crush the Southwest in particular. And I'm not a fan of this one at all. So having a look through the document, talks about the tax on individuals, ISA limit, high income child benefit charge. So again, don't forget that 60k limit kicked in. It used to be 50. It now kicks in at 60, and it's slowly crawled back between 60 and 80. There still isn't any change on the household being considered. You got a husband and wife claiming child benefit, and both of them earn 59,000. Just shy of 120k coming in the house. They don't have to pay any child benefit back. But someone earning 65,000 and their partner earning nothing, he has to start paying it back. I mean, it's just bonkers, isn't it? It really does beggars belief. But anyway, care relief, shan't get into that. Digital record keeping, that goes back onto MTD. Minimum wage, yeah, we've had that increase. I really do feel like they're trying to kill off young people, their prospects of getting work. It's so difficult now for young people to get into work as it is. We've got record NEETs. What's that NEET stand for? Not in education. Was it not in education, employment or training? I think is a NEET. So we've got record highs for that, and the increase in national minimum wage only makes that worse. EMIs, that's far too complicated. Company car tax, a bit boring. PAYE for umbrella companies. The sooner they scrap the umbrella companies, the better. Loan charge review, fairly standard stuff. CGT, we talked about the reduction from 18 to 14% on the writing down allowance. Incorporation relief, that's an interesting one. Yep, that's all got to be declared on the tax return now. It was just sort of automatic. IHT, pension funds, capital allowances, I've talked about that. Going down from 18 to 14. Business rates, we've gone over e-invoicing. The local visitor levy in England, I'm not a fan of that. You shouldn't be taxing people to visit. VAT rates, no changes on that threshold. They couldn't put it down. I don't know why everyone was talking about. Sorry, they couldn't put it up. I don't know why everyone was talking about putting it up. It would be against the European, I can't remember the legislation, but effectively, there was no way it could go any higher. It could only go lower. So that threshold. I'd be surprised if they bring that in now. Next year, who knows? It's banded about enough. Stamp duty, companies, no change in the rate of corporation tax. EIS and VCTs, I shan't touch on that. Penalties, yeah, we've got a new penalty system coming in. I've talked about that separately. So, yeah, I think if we're going to talk about the budget, apologies for this sort of ranty long. I've nearly kept it under half an hour. I'm not happy with the results of the budget, as you can tell. I think that we are increasing the amount of tax that people pay, or the government is increasing the amount of tax that people pay, and it is working people that are going to suffer the most as a result of that. I know you can easily say we haven't put income tax up on self-employment or employed people, but not increasing the personal allowance, that's fiscal drag, that is increasing the amount of tax that they pay. I did a webinar a couple of weeks ago, last week, which was absolutely fantastic. And Emma Rawson summarised it perfectly by saying there was a lot of tinkering in tax legislation, which isn't helpful. And then Jack Bone with the absolute legendary quote about why don't the government go after the charlatans rather than going after working people, could not support that sentiment even more. So if you've enjoyed that today and you want to hear more from me, please give me a like and a follow. Make sure you subscribe on Patreon. It's free. You can get my podcasts. I'm going to do this as a YouTube video, hopefully as well. I don't know what's in the background. Nothing too exciting, hopefully. I haven't sworn, I don't think, which is a winner for me. That's usually quite difficult. So yeah, thank you very much, guys. Hope you enjoyed it. If there's any content you would like me to cover in the future, please give me a shout. If not, I'll speak to you soon. Cheers. Bye-bye.